Good morning. It's Tuesday, August 6th, about 6 a.m. Central Time. Overnight, the precious metals are calmer, and so is the Gulf of Mexico. It was an ugly day in the markets on Monday with sharp losses across the board. The S&P 500 closed down 3%, its biggest one-day drop since September of 2022. The Dow Jones Industrial Average slid 2.6%, the Nasdaq lost 3.4%, and the Russell 2000 fell 3.3%. Gold saw a $97 range, about testing the 2,500 level and also the 2,400 level, both in the same session, and silver had a $2.20 range with spikes in volatility in both. There's a lot of speculation about a recession, an unwind in bets in big tech, and the carry trade led to a broad-based liquidation. I've covered the carry trade several times on these videos. Essentially, all it is Japanese investors sell the yen, they buy US dollars, and then they buy technology stocks and small caps with it. When the cost of carry, that's the cost of borrowing these yens, starts to go back up because of the fact they've had interest rates at zero, they raise them up a quarter basis points, traders start to unwind that. So they'll have to sell the tech first, then they sell their dollars because their tech is settled in dollars. They sell the dollars, and then they have to buy back their yen. That's what they end up with, and that's why if you look at the yen futures contract, a huge spike in volatility. If you do want to trade Japanese yen futures, the options are extremely liquid, and there are many contracts on the yen, so you don't have to get involved with that larger contract there. Position sizing is paramount, especially in spikes in volatility like this. The silver market, the average range is about $1.02 right now a day, and on that gold market's about $42 a day. That's why those smaller contracts like the 1,000 ounce contract, the 10 ounce contract on gold makes sense here for people to come into these markets here on the futures contracts. Now there is risk of loss, of course, in trading futures contracts, but the fact that they have these smaller ones, you can position size things a little bit better. So while the rest of the market was panicked, we were very calm. There are many of you who get the middle's edge, know the levels on the gold and the silver market that I see as value zones on both. I mean, silver constructively, I've been waiting for this test of the 200-day moving average. If you watch several of these videos going back, you'll see that I mentioned that I believe that the bargain hunters will step in around that area and as an area of interest where we see long-term value. If you don't get that morning email covering the precious metals, you can subscribe to a 2-week trial. Just look below this video link if you watch this on something like YouTube, or you get our email edition of it. Look below there. You can register for that. So today it's going to be a lighter economic data front day. We've only got trade balance data. I don't think that's going to move the markets whatsoever here, and we don't have any Fed speakers coming out. So it's really going to be light here today, tomorrow. Thursday we'll get quite a bit of data, and then Friday no data whatsoever. If you look at the CME's Fed Watch tool, so when you get these huge shocks in volatility, like you get the VIX spiking to 65 and things like that, and all of a sudden emergency rate cuts are being discussed, a lot of times it's a one-day event. People are talking on their emotions. So if you look already at the CME's Fed Watch tool, where yesterday it was like a 99% chance that they're going to do a 50 basis point interest rate cut at the first, when they make their first cut. They've only done that 2 other times. They did that in the 2001 dot-com bubble, and they did that in 2007, right at the start of the great financial crisis. So this doesn't feel like great financial crisis. It's just a small correction. Many of these markets here, many of all those Magnificent Seven stocks are still quite positive on the year. So it's resetting. Things are a little bit calmer. About a 24-25% chance that the Fed only cuts 25 basis point and 75% chance that they cut 50 basis point. Remember, it was yesterday, it was about 100% chance that the Fed will cut 50 basis points. Now, looking at the gold market here, it did test that 200-day moving average yesterday and then was able to push back above it. So your critical, or I'm sorry, the 50-day moving average, 50-day, not the 200. 200-day is much lower. $2,265 is the 200-day. The 50-day moving average is 24.22. So we consolidated around that for the moment, broke below it for just a brief second, and then we were able to come back up and recover some. So gold market trading right around 24.50. I like to call this kind of the pivot zone here where we're at right now. Markets gotta still close over $2,482 in order to capture the bullish trend. So that's on for the swing traders and the intermediate term traders. Your critical level of support is going to be pocket support 2,400 down to 2,396. The silver market, now that's been really impacted by the copper market falling so dramatically. And remember, these are speculative commodities. Silver is it's 54% of its industrial demand. So if you see a slowdown in recessionary terms, you're going to see that silver demand come off quite a bit here. So even though there is a supply demand imbalance, it's just really hitting the demand structure. But if you look, 2658 is going to be the 200-day moving average on silver. And I think that that's a pretty interesting level there. Getting into a couple other things here. The bargain hunters are stepping into the Bitcoin market. They are stepping into Ether just in a light way. The crude oil market starting to recover as well. Dollar index is one of the higher currencies here today. So up 45 ticks, and all the other foreign currencies are down on the day. And of course, U.S. equities are recovering. So calm day here. Be vigilant out there. You know, take a calm look at these markets here. Plan your trade and trade your plan. That's what I always say. So you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk loss. May not be suitable to all investors. Good luck, good trading.